and I'm still working on it. So I'm literally just doing this from my living room couch. I'm actually not going to be able to post on Instagram as well. I think what I'll just do is I'll put on the guys on Instagram. I'll just put on the audio, so people are able to just hear. So give me a second. Let me share my screen. Yeah, really, there's really nothing. Okay, I didn't have anything prepared today, but let me just share my chat and just talk through it. So yeah, I was basically planning on just discussing a few things before getting on for the weekend. As I've said, today is actually the first day in about a week that's I'm okay enough to talk for to talk for more than 15 minutes without screaming out or moaning for pains. So I just decided, like, you know what, let's have a go at it. For the guys on Instagram, apologies if you're not seeing the screen properly or if you're not hearing me well. Basically, what I was saying was that I'm not able to broadcast from my study because I have a condition in my neck and shoulder that's making it difficult to sit down in my study. So I'm just doing this from my living room today. So without much ado, let's get started. Welcome to Crypto Pulse Weekly. Yeah, we didn't hold last week because I was not well. I'm still recovering, but I think we can have a go at it for this week. It's going to be a short one. Just a number of things to point at or to have a look at for the week and the rest of the month. So we can say that February has been fairly okay up until now. And the reason why this is dropping rapidly now, as you're seeing it now, is because there's news of Russia invading Ukraine within the next 72 hours. I don't know how true that is, but as you are aware, the rumors of war are stronger than the wars themselves. The effects of the rumors of war are stronger than the wars themselves in terms of how they affect the market. So that's why the market's plunging. But technically speaking, I think it's probably going to sit within some of the technical annotations I've made before. And one of those annotations was this two curve that I drew here way back. I don't know if anybody remember that about 3 or 4 weeks ago, where I said I expected the market to make an inverted double bottom in terms of market structure. And let me zoom out a bit for the benefit of people on Instagram. So I expected the market to make an inverted double bottom in which I drew these two cups. Now we had the first one here, so we can take this bottom here as the head of that inverted double bottom and these two shoulders. So when this comes down, I expect that it will meet its Waterloo around 39 or 40K. Once that happens, I think we're going to have a bounce. If it happens, let me not say once that happens. If it happens, I think we're going to have a bounce. That's one of two scenarios. The other scenario is the one on the 6-hour charts. And I think I was having a discussion with somebody about this actually about 2 days ago when you mentioned 6-hour chart. I said, yes, I actually heard about it way back. And that was that if you break the 6-hour charts and you retest it and go upward again, you're likely to have confirmed an uptrend. Now, we have not sustained the uptrend from what we're looking at because right now it looks like 6 hours chart is being broken. We have about how much? We still have about 5 hours left in this hour, in this 6 hours. Yeah, 6 o'clock, 7 o'clock. Yes, we have about 5 hours left in this 6 hours. So this is quite premature in terms of the assessment of the 6-hour time frame. But on the 4-hour time frame, this looks like a perfect recipe actually. And what do I mean by that? For people who are taking classes in trading with me or who understand the markets, you know the age-long principle of test, break, and retest, which means when you have a resistance or support or area of demand and supply, when you test it and you break it, and then you come back to retest it, it's a confirmation that that area is a very strong area of supply and demand, and there's likelihood that the market will continue to extend forward. So if the market if the market comes back to this green zone is the area of supply and demand we've had for quite a long time, actually. We've had this for, this is 2021 July, as far back as May, I think even before that, February, yeah. So being in that region, we've started visiting this region since the beginning of last year, 8th of Jan, which was when the first time we touched that region. It was a resistance supply region, then became a resistance again. Then we broke through it and then came down to it mid last year around May. Then we sat under it for a very long period of time till we attempted to break through it in June, and then tried it again in July before eventually breaking through. Now, when we broke through in July, we came back again in September, tried it again in September. And what we've seen now is that we've come back all the way from last September. We've tried it for a while here before breaking through. Now we've broken back up, and the market is attempting to retest that region. What I'm saying is, in essence, is that if we retest the green zone region, which is between 41K and 42K, and the market does not close below it, then it's a confirmed long-term, no, let me not say long-term, short-term uptrend, because what that means is that we've tested the region, we've broken out of it, and we've tested it. And secondly, the 200 moving average is usually considered a very strong area of support and resistance on the higher time frame. So anytime on the intraday that we're below the 200 moving average, signified by this purple line, we are considered bearish. If we're above it, we're considered bullish. So we've been bullish now since the 4th of February. Today is the 11th. I think we'll see some downward pressure till we get to 40K. I think we'll bounce off 40K, except, I mean, if Russia carries through on their what's it called, on their threats, then the market will crash furthermore. But the market will recover, because almost every scenario in the world economy and politics are being priced into the market. So usually if there's going to be war, if there's going to be famine, if there's going to be pestilence, if there's going to be anything, it's usually priced into the markets even before it happens. So by the time it's making the news, what is happening essentially is that the market makers are taking profits of their positions. So right now, I think that this whole Ukraine scenario is being priced in. I mean, I have CNN Open Rights beside me now. I can see that they're saying that the Russian invasion could happen during the Olympics. And I saw from another source earlier in the day that I was saying it's likely to be in the next 48 to 72 hours. Well, I mean, I don't know what's going on in the mind of Mr. Putin, but it seems like a dumb idea, but when everything is not going well. And one of the reasons I actually wanted to have this call is just so that people understand what's going on in the world and basically understand how to take appropriate positioning when economies are not going well and things are going bad, especially within countries. A usual vent, the usual way of escape for that country or for that regime is to stage a war. And you might say, why will staging a war look like a very good thing? Well, staging a war is a political tool for great distraction, because it takes the focus off the problems within and creates an enemy without. As long as there's an enemy without, then there is less dissipation within, and people are less disagreeable with themselves because there's now a common enemy. So if you took the World War II scenario, for instance, when Pearl Harbor was bombed, all of a sudden, Japan became the number one enemy for the United States. And everybody rallied around. Everybody was willing to send their children to the draft. Everybody was willing to get enlisted to the army. Everybody really was willing to contribute to the forces because they're like, oh, we are not safe. The world is coming to an end. Our children are going to perish if we allow these people to go scot-free. So every approval that they needed, for instance, to deploy the atomic bomb was given without a blink, because it's what we call in my MBA class extenuating circumstances. We now have extenuating circumstances that warrant the use of such force. So this war, in as much as it looks to me like originally Putin was trying to posture and probably just distract people away from what's happening within his own country in terms of failing economic policies and inflation, it provides an opportunity for the West as well to distract the populace from what's happening. I mean, guys in the US, you saw the results. CPI is the highest in 40 years from what was produced the day before yesterday. So it's obvious the inflation is here. Fed has no clue how they're going to bring it down. If they cut the rate, there'll be recession. If there's recession, we'll go into a tailspin of debt cycle, and they'll have to pump the money again. So there's no solution in sight, truly, really and truly. So a good and easier way out for most nations actually would be to go to war. Now, what that does is going to war takes away the focus, as I was saying. It takes away the focus from the country, because then nobody's thinking about the country. Everybody suddenly forgets about vacation. Everybody's now concerned about safety, sovereignty, legacy, our children. Issues will now start coming up that were not in the forefront. So what I'm saying is you need to read the handwriting on the wall. I mean, for people who are believers in Jesus, this already confirms a lot of things written in the Bible. But even if you believe otherwise, a number of things are sure. The economic system of the world is broken, and there is no way to fix it other than to continue pumping money. Bitcoin and the world of crypto provides a small escape hatch for people to be able to protect themselves, essentially, from this failing economic and financial system. So will Bitcoin go back to 20K? It doesn't really matter. As a matter of fact, if there were to be a proxy war started in Ukraine, it would be a better time to buy Bitcoin, because what it means is that by the time that war is done, there will need to be a massive reset of the financial system, such that people's money will have lost so much value that you won't believe it. Think about it this way. There was a civil war in Nigeria, my home country, in the 1970s. There were people from a particular part of the country, the eastern part of the country, that wanted to break up and be this. I mean, they wanted to be sovereign. And I think they had the capacity to be sovereign, because as at that time, they were probably the most learned, the most sophisticated in terms of trade and enterprise. And they had a lot of resources. Unfortunately for them, most of their resources were in the West. And they wanted to secede and move to the East, but they had their resources in the West. I think that was the primary failure on the part of the people. And then they had a military head that capitalized on the desires of the people. Military colonel, I can't remember, was it colonel or lieutenant colonel then? And led them to the rebellion. Unfortunately, because the logistics does not tie up, your assets are in the West. You want to fight a war to retain independence in the East. Eventually, they got locked. Their assets got frozen. The generation of people that were involved in that war, many of them left their base in the West as millionaires or billionaires in today's terms, and came back essentially homeless because their assets got frozen as a result of that war. I remember reading one of the accounts of a particular, I think it was the chairman of the bank, one very senior guy, very rich guy. He said his father was very wealthy. Was an Easterner who was in Lagos. And when the war started, the man made a very, very sharp move. He gave, I can't remember how many £1,000 he gave to a reverend father, that the reverend father should keep it for his son so that she will help him continue his schooling in the UK. That money literally was the money that helped his father build back his business and also helped the guy finish his schooling. If he didn't give him that money, and the father had gone to the East like everybody, every other person, he will have come back after the war completely penniless. Because the authorities essentially froze the accounts of all the people of means from the eastern part of the country that had assets in the West. And that was the end of it. Why did I go into this story? I went into this story because you need to understand that the monetary system today belongs to the government of wherever you are. Wherever country you are, bring out a note and look at that note. If you read the inscriptions on the note properly, you see that it belongs to, in the case of England, the Bank of England or the Queen. In the case of Nigeria, it belongs to the Central Bank of Nigeria. So even though that note is in your possession, it is not yours. It's not your property. No matter how much of it you have, it's not your property. It belongs to the government. And that's why the government can leverage on it and do anything they want with monetary policy, because that's their instrument of power over the people. What cryptocurrency gives you, especially cryptocurrencies like Bitcoin, is the opportunity for independence, the opportunity to own your property rights completely. And situations like this are what make it actually stronger. So if you think that Bitcoin goes to 20K, it's a sign of market weakness, don't be fooled, because in the last 2 months, whale addresses have accumulated over 200,000 Bitcoins in the last 2 months, just the last 2 months. So whilst people are selling, or people panic sold their Bitcoin, and we're thinking Bitcoin is going to 0, or it's going to 10K, or it's going to 20K, these large holding addresses have literally been buying more. Why are they buying more? Because they realize that for the first time in human nature, we do have a monetary system that is capable of securing and storing value over and above any other thing we've ever produced as a civilization of humanity. So regardless of what the price is doing, I mean, just how many weeks ago, let me flip to the weekly charts just to put this in perspective. How many weeks ago we were here? Just 3 weeks ago, we were 34, 33K, and everybody was like, okay, Bitcoin is going down. It's going down to 28K, going down to 30K. And then I actually said, okay, downward target was 30K. I was expecting Bitcoin to reverse. If you remember that discussion back in the 3rd week of January, that I said I was expecting Bitcoin to reverse because it has now touched the lower end of the Bollinger, and that was the lower standard deviation. And I was suspecting some sort of a pullback. And of course, what happened was the 2nd week after that was when we had the pullback. So right now, we're more than 15%. Yeah, we're more than 15% away from where we were at the end of 2 weeks ago. 25% actually. So it's not consequential what the price looks like right now. What's important is what your strategy is. And I keep telling people that this is a marathon. There's a different strategy when you're running marathon than when you're running a sprint. In fact, I used to be a track athlete when I was in primary school and early part of my secondary school. And I remember then that I was a very poor performer in 200 meters because I was a sprint kind of guy. I like to go all in and pump the gas to the max for the first 50 meters and recover in the last 10 meters. And so I was always feeling people that I could trash or beat their time in 100 meters. I couldn't beat them in 200 meters because my body was not conditioned and my mind was not conditioned for 200 meters. I was conditioned to go in a straight line and push the throttle to the max, and then go and pass out at the end of the tracks. But if you put me on 200 meters, I might do fairly well, but most of the time I'm not able to keep up because it's almost like I don't have enough wind in my lungs to go that length. So your strategy will be different depending on what kind of athlete you are. If you're a 400-meter athlete, strategy is going to be different from 200 meters. Strategy is going to be different from 800. It's going to be different from 1005. Definitely going to be different from a marathoner because When you're running a marathon, you're not. It's an endurance task. It's no longer. It's no longer just an activity. It's an endurance task by putting your body in for a long period of time, and it has significant consequences on the body itself and on how the body reacts. I mean, we're not talking physiology today, so I don't want to go there, but really and truly, you need to consider what kind of player you are. And it's something I've been working on I think, the last 8 weeks. I'm putting up a program to help people understand what kind of player they want to be. Because whether you like it or not, what Bitcoin has done is to bring a new level or a new layer of innovation into technology, and it's going to change everything. So we're still in early days. If you ask me, this innovation is at least going to run for another 10 to 20 years, the minimum. So if you have a 20 years horizon, how are you going to play it? And that's the question I asked myself. So why would I be looking at what the price is doing in the next 5 months or the next 3 months or the next 4 weeks if I have a 20 years horizon? Like one of my friends said on Twitter, he said, if you had 0.1 Bitcoin, how did he put it now? No, he said if you had 0.1 Bitcoin today, that in 10 years, it could buy you a house that is 10 years from today. 0.1 Bitcoin right now is about $4,200. That if you have that 0.1 Bitcoin in 10 years' time, it could buy you a house. And that's in 20 years' time, it could buy you 10 houses. And I get what the guy was saying, because what he was saying was that the monetary policy that we're benchmarking Bitcoin against is so weak and not sustainable that the price of Bitcoin will only continue to go up. And the reason for that is because this monetary policy was built to accommodate gaps, to accommodate weaknesses, and to accommodate pressures and imbalance. That's the way the monetary policy of the world was built. It's built around debts. And that's why the debts keep going up. And people don't understand what's happening. They keep telling people lies that, we're paying off the debt with taxes. The taxes are not paying anything in any of the civilizations, either here in the US or anywhere else. The taxes are just a fraction of the overall spend of the government's money. The truth of the matter is the debt will continue to increase because there is no solution. The government does not have a solution to solve any economic problem in the short term other than to increase debts. If you attended the London Crypto Summit, you understand the explanation I was giving about how money is created and how money is produced into circulation. If you understand that concept and how money is created, and you understand that we're in a giant Ponzi scheme. Global economy is a giant Ponzi scheme that is being maintained on many levels. And the reason it cannot burst is because there are true inputs and true production going up. So it's not immediately apparent that that's what's happening. But what's happening is the value of the world's economies and the value of people's wealth is continually being devalued. Now, when you look at CPI, which is what's they like to share in terms of what do they call it now? They call it a particular inflation. But consumer price index is the inflation on consumer goods alone. Now, that's just a window snapshot of a small sector of the economy. If that small sector of the economy is already showing 7%, just that small sector, then you can think about what the real sector will be showing. Of course, they can't show you the real sector because the real sector will show that true inflation is probably around 20-something%. And I'm not lying. If you go and search Federal Reserve Monetary Supply, M1 Money Supply online, you'll see what I'm talking about. The money supply they've been printing money consistently every month since COVID started on a new level. They print money normally, but the money printing has been on a new level because they need to pump the economies with the money. They need to provide all these aids that they're talking about. So as a result of that, the whole economic system of the world is just bombarded with too much debt and too much money. So you see stocks going through all-time highs without any real productivity going on. And of course, the smart companies, they're buying back their own shares. As they're buying back their own shares, they're contributing more to to the growth. So it's like pumping your own coin. As the companies are buying back their own shares, they are reducing the share circulating supply of their shares. So the share price keeps going up. Despite the fact that really nothing productive is changed. Anyways, let's talk about short term. I'm not talking about macroeconomics today because it's just depressing sometimes when you see all these things. So I don't want to talk about it too much today. Let's just talk about what you can see, what you can see in front of us, and move to other things. So as I was saying, um, we've sort of made a U-turn in terms of correction from this downtrend. If you look at it on the weekly charts, if we had closed the week here, it would have been actually confirmed. But the fact that this is flat now is a bit concerning because it means that there is weakness. There's weakness along the length of this candle on the weekly level. And that weakness may not be unassociated with the breaking news that US is ready to respond alongside our allies should Russia decide to take military action in invading Ukraine. What that means is a declaration of war. I mean, I'm just reading what's on the news on Sky News beside me right now. So a declaration of war, of course, can never be good for the market. So take S&P 500, for instance. See, it's S&P 500 on the daily. It's taking a plunge like crazy. Of course, DXY, which is the dollar index, will be volatile because there are various ramifications of what could be happening with the dollar index. So if there is war, the US economy will always be booming because a lot of what they call it, the war, what they call it, the military industrial complex. That whole industry is very strong in the US. So you see a lot of stocks booming in the US if there is war because it means that there will be a lot of sales and government will pump money unquestioned into those areas. So I think this coming week, the coming 2, 3, 4 weeks is going to be very, very volatile. If Putin decides to strike, I think he will meet his Waterloo. And not because I support the West ideologically, just because the West has been looking for opportunity to hit him. Let me use that word. There's not been that opportunity. This provides an opportunity. And that proxy war is going to be very, very, very protected. If it does happen, it's going to be very, very protected. There'll be economic damage on every side. But if Putin doesn't surrender easily, it's going to be very protected. Of course, there are chances that, they do it for a few days. And once they see the response from the West and from NATO, they back down and go back to stay at the border. So because what is happening here is, just for the context of people that don't know, the Russian government is saying that the US and the NATO allies are weaponizing the NATO states in an attempt to invade Russia or plan a future invasion of Russia, and that they want to adopt Ukraine. Ukraine is just about to join NATO. They've not even joined NATO. But they want to adopt Ukraine into NATO, blocking their own plan of expanding Russia as well. But if his move was a preemptive move, I think it's going to turn very sour because there are so many countries that are looking for excuses to print more money without, the attendant worry about inflation. Inflation is a big worry now because everything is expensive. I don't know about you, but where I live, even vegetables now is double the price. My fuel is double the price. Everything is expensive. Like everything is just crazy expensive right now. So the inflation is kicking in big time. The Bank of England has raised their rates a bit, just to demo something that they're raising rates. But the one that will have the biggest impact is the Fed. So the Fed's raising rates usually what it means is that people move from risk assets to government assets, which are less riskier. Meaning people move from the fringe Ponzi's in stock. Of course, right now Bitcoin is still considered by mainstream finance as fringe Ponzi. So they move the heavy money from there into government bonds, which is free money. But once government bonds begins to get boring and the rates are not attractive again, they move back. But what I'm saying to you, listener, to me today is that by the time they move away and they move back, you could generate life-changing wealth by just sticking with cryptocurrencies. And even if it's only Bitcoin you want to buy, just hold it. Just keep your, if you can't do anything, just keep your savings in Bitcoin. You will save yourself a lot of stress in the future, keeping your assets in Bitcoin. I think I'm going to stop talking for now. If you have any questions, please just unmute your mic and let's have a question. I don't want to stress myself too much. I'm not fully recovered from my wala. If you have any question on Instagram, please just type in your question. I'll take your question as well. Yeah, Banjo, go ahead. Your mic is hot. I can't hear you. Okay, if there are no questions for today, that's fine. I think it's a good start. I'm just recovering, so I just I don't want to wait till next week before having a session. But generally speaking, my thoughts are that we might see a plunge down to the 40s. If we see a plunge down to the low 40s, like 40, 41, then it gives us the opportunity to retry 45 and 46K in the coming weeks. If we retry 45 and 46K in the coming weeks, let's assume that the Russia scenario does not play out, then we might continue to grow. If the Russia scenario plays out, it's been significantly priced into the markets. Stocks will drop. There will be flash drops, but generally speaking, from a market structure point of view, Bitcoin has hit a local bottom. That's the takeaway I'm going to say for today. Bitcoin has hit a local bottom, which means the market bias has significantly changed, and as a result, no matter what happens in the macro, I don't think we're going to see. I mean, in the period that we started this discussion, wow. In the period that we started this discussion, actually, Bitcoin was crashing towards 40. It's touched 42 and it's back to 43K. Wow. Ladies and gentlemen, local bottom is confirmed. The kind of buying pressure and the kind of buying action I've been seeing over the last 1 week, anytime there's a drop in Bitcoin price, shows that we have changed. We're no longer in the bear market, essentially. Even though the price is still below all-time high, I think we're now positioning ourselves to start moving in an uptrend. Confirmed. I think I can confirm that. I've confirmed by some other means before now, but everything I'm seeing now is just further confirmation to that effect, essentially. So I talked about the 6 hours. The 6 hours. Yeah, I was just talking about the 6 hours 30 minutes ago. Let me share my screen again for the guys on Zoom. I was talking about the 6 hour charts just when we started. That if this line doesn't get broken and we close today, what it means is that we've confirmed an uptrend. Anytime 200 moving average gets broken on 6 hours and the price stays above it, it's a confirmed sentiment change because it's eventually going to reflect on the daily chart. Right now, we've not touched this 6 hours until beginning of this month, essentially since November 18 last year. So that flip to the upside of the other side of 200 moving average is a confirmation for me that, yeah, sentiments have changed. And I was talking about this green zone before. That green zone is still sacrosanct as a T. So when people asking me, is it a good time to buy? Of course, you're probably not going to get a dip to buy unless there is war in Ukraine, in which case they make a lot of noise about it in the beginning of next week, and there's a flash crash to the upper 30s. I don't see Bitcoin coming down anytime soon. Bearing in mind that from a pure tokenomics perspective, 90% of the Bitcoins have now been produced. And even the ones that are being mined right now, the miners are not selling them. What they're doing is they're going to Western venture capitalists and they're raising funds to fund their operations, and they're keeping their Bitcoin on their balance sheets. I talked about this in the London Crypto Summit as well. So happy days ahead for all hodlers of Bitcoin. So in the absence of any other question, I think I'll stop here. I'll give myself some time to rest for the weekend before we begin also on Boston next week. Thank you, everyone. Thank you for everyone on Zoom for joining as well. We'll have a lovely weekend.
Thank you.
Thank you so much.
Thank you very much. Drink water, cup, get some rest.
Thanks, sir.
Thank you very much, Doc.
Thank you.
Thank you, Doc.
You too.